warmly welcome to Insight Asia, a podcast by SEB where we try to connect the dots and make sense of what's going on in Asian economies and financial markets and how that impacts financial investors and companies in Northern Europe with a presence in or an exposure to Asia. My name is Fredrik Handel. I am head of Asia for SEB and general manager of SEB's Singapore branch. We are recording this pod on the 25th of October in the afternoon, local time here in Singapore. And with me again to discuss the latest in Asia is Sean Yokota, head of markets at SEB Singapore. Hi, Sean.
Hi, Fredrik. Nice to be back.
I would like to start this podcast by asking you, Sean, to summarize a little bit the latest in Asian financial markets or anything else that caught your attention since our last pod.
Sure. There are a couple interesting things. First is the data that just came out on China. They released third quarter GDP yesterday, and the headline growth is still okay. It's around 4%, but looking at all the details are still very weak. If you look at things like retail sales, property, exports, imports, unemployment rates are higher. It's just an endless more negative data on China and what's happening. And then you combine that with rising US interest rates and a stronger dollar, it's leading to a weaker renminbi and even things like the Japanese yen's weakening. And you see more and more intervention by the authorities, as we saw on Friday. And then the last part is what happened yesterday post the party congress was the Hong Kong stock market fell almost over 7%. And it's back today a bit more, but it was interesting to see a market reaction to what happened with the party congress in the last 7 days. What about you, Fredrik?
Like you already mentioned, the Communist Party Congress, all eyes have been on that for both leading up to it and now also experiencing it in the past week plus. I think we all paid attention to Xi Jinping's authoritative policy report that he made on behalf of the Central Committee, as well as, of course, the announcements of who will be on the Central Committee, on the Politburo, and of course, above all, the Standing Committee. And it was quite dramatic. You said in the last pod, Sean, that it wouldn't be so dramatic, but actually, the changes are quite big. You look at the Central Committee; it's 205 members of it. Actually, some 60% of it was changed since the last party congress. And if you look at the Politburo, the 24-man strong Politburo, a very large part of that was changed as well, and primarily with loyalists to Xi Jinping. So, analysts now say that he kind of controls or has at least 80% of the Politburo, positioned with people loyal to him. And above all, like I said, the Standing Committee, where the other 6 members of the Standing Committee, except Xi, out of those 4 were changed, and the new ones are all fairly old and also very loyal to Xi Jinping. So I think the questions that everyone had before this committee, some of them at least have been answered. One was, of course, will Xi Jinping consolidate his power? And yes, he did so, even to a larger extent than I think most people expected. The second question was, of course, will he announce or at least indicate that there will be a successor to himself 5 years from now? And the answer to that question is no. Those who were appointed are all sort of at an age where it's quite unlikely that any of them would be a successor, which means that we actually are probably looking at another 10 years at least, possibly Xi Jinping staying forever. And we should remember, of course, that he's approaching 70 years old. So that was, I think, very interesting. And then, of course, there were a lot of conclusions to be drawn from the speech as such.
Why don't you just continue on from this about the speech, because there were a lot of things inside it. So maybe you can just tell us what are the couple of interesting things that you found within the speech.
First of all, I just want to give some more facts about the Congress. I mean, the party Congress as such is, actually marks the beginning of a 5-yearly reshuffle that will last all the way up until the annual legislative sessions in March. And by that I mean the National People's Congress. So while the lineup, first of all, the lineup that we saw over the past weekend lays out the hierarchy of the party leadership, the legislative sessions will actually formally unveil candidates for another number of government posts. So sort of a lot of the changes of how China will look going forward, we will know once those appointments are made. One of them is PBOC Governor Yi Gang, who was not elected to be on the Central Committee. So we will have a new head of the central bank coming up. We will also have a new head of CBIRC, the big financial supervisory uh, authority, where the same thing, the head Guo Shuqing will also step down since he will not be on the new central committee. And then, of course, the economic czar Liu He. We call him an economic czar. He's very popular among foreign analysts, sort of economic analysts of China, because he has been seen as a reformist, as a pragmatist, etc. He was the one who, by the way, negotiated with the Trump administration for the trade, this, what was it called, the stage one trade deal, etc. So he will also step down. So exactly how this will look, we will see a little bit later. But if I look at the speech as such, I think it's kind of a couple of interesting observations here. One is, I saw this report over the weekend where this analyst just calculated the number of times certain words were mentioned in the speech. Um, and they looked at the word security, and they compared the speech now with the speech. And again, this speech is just a summary of the actual report that the Central Committee makes. But if you look at the number of times the word security was used this time, it had increased dramatically from previous speeches 5 years ago, 10 years ago, and 15 years ago. So the same goes for the words science and technology. They were used many, many times now, much more than previously. While other words like economy and reform, the number of times that they were used had fallen quite dramatically. So this is quite interesting. It says something about China as we speak, and the goals going forward. I think another thing that's quite interesting to look at is you know despite Xi Jinping painting a very positive picture of the economy and all the strategic goals that we see in front of us, almost nothing was mentioned as concerned what is maybe most important for investors and companies doing business in China short term, and that's of course the zero COVID policy, the property crisis that we may talk a little bit about later, and of course, other things that should concern the Chinese population at large, such as the youth unemployment, which is around 20% at the moment. If I then just quickly make a few other comments on the speech as such, or an, what analysts have written, and what I see, I watched part of this speech as well. You know, what are the, I think for us in this podcast, I think is worth mentioning is what does it mean for foreign companies doing business in China. And I think one such thing is, of course, that economic growth will still be in focus, with I think with a lot of short-term focus on infrastructure investments. We will continue to see this quality before quantity, and addressing the property sector over investments. I think we will see China more addressing the demographic problem that has, all these actions taken so far haven't really changed the situation. There will be a huge focus, as I mentioned, on innovation and self-reliance in technology, etc. We'll see a lot of funds being set aside to invest in this, and above all, of course, for China to develop semiconductors. Another thing is, I think we can expect large dominance by the state in both industry and business, in particular in sectors where China sees threats, but also more intervention in general in business, in private business, with data security concerns and data security laws, maybe party cells being set up increasingly in private companies, etc. I think that we'll see more of that rather than less. I think we'll see more stability short term now that we know that Xi Jinping is in firm power, but we will also see less pragmatism, probably, and less dynamism, and politicians speaking up to correct potential mistakes. I think the risk of policy mistakes is probably going up. An example of this is Han Zheng, who is stepping down, someone I actually have met several times when he was party secretary in Shanghai and later as well. He always came across as a reformist and a liberal kind of politician, at least comparatively speaking. He's now stepping down from the standing committee. He was the one who stood up and sort of recommended Xi Jinping not to implement property tax earlier, for example, which was sort of probably going to lead to more problems in the property sector. We see Li Keqiang, the prime minister, stepping down, and he has been, at least people have speculated that he was actually critical of the zero COVID policy because it had such huge impact on the economy in China. And he's now instead replaced by Li Chen, who is currently the party secretary in Shanghai, and thereby was the person who has been in charge of Shanghai's disastrous COVID handling during the spring when Shanghai first was very proud of controlling COVID, and later when it broke out had to lock down the entire city for 2 months, which had devastating, of course, effects on the economy as well as on the mental health of people living in Shanghai. So that the fact that he is now number two and probably will become prime minister also has some implications and sends some signals. And then finally, I'm going on far too long already, but I think the fact that Wang Yi now will be formally the main Chinese foreign diplomacy and foreign policy spokesperson also speaks in favor of more wolf warrior diplomacy from China's side. He's that angry person you often see in press conferences, the guy with the thick eyebrows, who's always very angry with foreign press when they criticize China or ask critical questions. I think with him in charge, we will see more of wolf warrior diplomacy, and that means also on the margin possibly increasing geopolitical risks. Is there anything you want to add to this, Sean?
Yeah, just kind of a segue to the hawkish foreign policy. I think this always reminds me, kind of reiterates where Xi wants to take China differently than the past. So I mean, this is nothing new, but the basic idea, if you look back in history, was that Mao Zedong came in, he made China stand up, unify the country after years of hardship of foreign forces and domestic kind of instability. And then he had Deng Xiaoping come in, and he made China wealthy and exit China out of poverty. And so, like, economy was the number one focus. And then now you have Xi Jinping coming in, and he's really thinking outwardly and not domestically like the others. China's already doing well, and it just needs its place in the world order. So, like you said, I think that can raise international tensions. But he thinks, well, those are the consequences, right? So, I mean, this is kind of clear of what's happened in the last 10 years, and we'll probably see more of this going forward in the next 5 years. So, when I think of this, I always think she must have heard Frank Sinatra's song My Way, and he's going to go through with it.
Now, Sean, you have referred to this song a couple of times in our discussions leading up to this podcast, and so I couldn't resist checking out the lyrics of the song "My Way," and it actually starts with the words, "And now the end is near, and so I face the final curtain." Let's hope that that's not the case.
There's more to the song afterwards. But then you kind of mentioned many things about the statement. So I just want to kind of zero in on some things. And that's no pun to the zero COVID strategy. Um, Now, the rest of the world is opening up. And I think if you're a person living in mainland China, you would notice this. And maybe the authorities may see some pressure based on that. But, you can't contain COVID forever. So why isn't the leadership willing to open up? What's your thinking on this?
I think it goes back quite a lot to Xi Jinping. Him taking personal responsibility very early on. I've heard some speeches or recordings of meetings that he had with a WHO in the beginning of this, when COVID broke up out in Wuhan and all of that. And Xi Jinping says in those meetings that, "Well, I will call the shot. I'll take personal or make personal orders in this matter." And then, of course, once China was very successful and able to control and contain COVID and was quick to open up, China was for quite a long time actually the big winner and very successful, and could point at other countries, which he did, and saying that here's another sort of proof that our economic or our political system and our leadership is very strong. So I think China was very proud at that time and was quite successful. But then came Omicron, and that of course changed everything since it's so incredibly contagious. And so yeah, I think China now, it's been difficult for him leading up to this Congress, of course, to change this policy. And yes, I think China does look around the world, as you allude to, and I think their best input at the moment is probably Hong Kong. I mean, I lived there when Hong Kong threw in the towel and gave up on the zero COVID policy earlier this year. And if you look back now, in Hong Kong, over 10,000 people died, and uh, almost 90% of those who did die were above 70 years old. And I think that now for China with such a large population, of course, that's the big worry, and I think it's all about vaccination and medication, because in Hong Kong, at least, a large part of the population at large, they were vaccinated, while the older population wasn't, very well vaccinated. And for China now, where they are, you have a very large old population. We know that roughly 1 out of 5 in the segment about 80 years old are not vaccinated. Those who are vaccinated are most of them didn't have a third booster shot. Everybody has been vaccinated with China's homegrown vaccines, um, where there are question marks as to how efficient they are. And so, and China says in all, you read all the newspaper articles about this in China or listen to epidemiologists, and they point to this, that the fact that the healthcare system isn't well prepared, the sort of the efficiency or the capacity of the healthcare system isn't ready for this to take place, and so many old people in the older populations, among others, to be hospitalized. So, of course, the huge question is, when will it end? When will this mass testing and locking up people in homes and isolation centers and all these travel restrictions disappear? Now the party congress is over, and like I said, now this sort of power transition, or it's not a transition, obviously, but this change of guard, partly at the top of the party, it will continue to take place leading up to the National People's Congress. And then we'll approach the spring with warmer temperatures, etc. in China. So I think there's a case for China to now start to beef up its ability or its capacity in the healthcare system. Hopefully, I mean, I would wish that it would be willing to import vaccines. That doesn't seem to be the case. They're working on their own mRNA vaccines, and other treatments of COVID. So hopefully, now the leadership will feel more, or increasingly feel confident, and start to prepare for this to happen. And I think what I will be looking out for is, of course, a change in the narrative. Once you start to see that there is a little bit of, we are preparing for this to happen, then I will be more positive, and I would expect that to happen rather soon. Although I know that most experts are quite negative and think that this will take quite some more time.
If you think of next year, what are the big macro calls? And it is about when China's going to open up, because one, it's good for growth or sales as a corporate, but also from financial investors' point of view, we're in this period of mass inflation, and if China opens up, it's going to cause a different calculation for the Fed or anybody else. So I think it's a big topic, and especially what you mentioned about Hong Kong. That I think people were interpreting Hong Kong as maybe a prelude to what can happen in China, but you're kind of saying that they kind of took the information and made it a bit more conservative. I think that's very interesting. Just kind of one more thing I want to add is I was also looking at what Taiwan was doing because they exited zero COVID as well recently. And they're in a similar situation to Hong Kong, where over 10,000 people also died as well. And they're about 1/50th of the population. So you can just imagine, what kind of calculations that can have if China starts to open up, and why they might be a bit conservative in their approach.
Yeah, more to follow on that. We'll probably come back to that in future podcasts, Sean. I thought we should also give a short update on the property sector that we discussed the last time. It's kind of more of the long-term risk for the Chinese economy, I guess. Anything there you want to sort of mention? Any updates?
Yes, it remains weak. We just got some latest numbers out from September, and property prices are down about 3% overall, so it's negative, and the sales are down over 20%. And it seems like things are uh, getting worse in terms of the property sector. I think just one thing to keep in mind is that China does implement policy in an iterative manner. So usually the central bank or the central government makes policy adjustments, and the local governments are supposed to follow up. But usually in the first announcements, they don't listen too well. So they only implement a part of the policy. And then they see data like this and say, okay, you guys aren't doing your jobs. and then they go back to the local governments and kind of present them with the data saying you're not doing good enough. So I think that's what's going to happen. We've gone through 2 or 3 rounds of stimulus on the property sector. So I think in the next 3 months, you'll probably get harsher statements from the central government to push for recovery in this. So it will become less negative. And this will be pretty important, as you mentioned, because China has a relatively high debt economy, and that is tied to the property and the asset markets. So you want to see this recover in order for the big economy to start to show some growth. Frederick, what are you hearing on the ground when you're talking to people here?
Since we had our last, or we did our last pod, I've had a lot of meetings with Asia executives of clients and other companies in the region, and I have to say I start to see more examples in real life of companies actually, implementing this China plus one strategy we talked about the last time. Uh, in the sense that they reduce a little bit of their exposure in China and invest more, then the next investment takes place in other countries. And I remember there's so many reasons why this is happening, of course. And but I think that you can look at a lot of research, like we mentioned the last time, that are looking at this. And one recent report that came up was the Inter-China's M&A, Inter-China, the M&A boutique company that did a survey among 200 CEOs of multinationals in China, showing that over 70% are still committed to China, but in order to sort of make the China nation set up more competitive and reduce a little bit of the China exposure, actually 38% of multinational companies say they're actually considering divesting one part of their business in China and possibly investing elsewhere. Uh, I mean, one company that I met recently, where China used to be, over 50% of their Asian sales at one point. They have moved quite a lot of their focus now to they stay in China. They continue to invest there for their China business, but when they have invested in the past few years, it's been mainly in Malaysia and Indonesia, and above all, big investments into to India. Two other companies I met recently are specifically looking at moving part of their manufacturing to Vietnam. One has already started, another one is moving there. And like I said, there are many reasons for this. Many times it's sort of a very important client making these moves, heading up in India or Vietnam, and they just follow that client. It can be that they see, of course, this market as interesting in general, and that they set up. But what I found most interesting is that in several discussions I've also heard now that it's the threat of a Chinese invasion of Taiwan that has come up, and I think that everyone sees that as extremely unlikely. There are so many differences in this scenario when comparing to what we've seen in Russia and the invasion of Ukraine, but still they have been very much reminded of what happened there. Some of these companies, they had to very quickly withdraw out of Russia for the obvious reasons, the risks of being sanctioned, reputational risk, and the fact that you had sizable business in a country that is now at war. So I think they were reminded, and hence they now at least feel obliged to make some prudent risk analysis and see how they can, what could they do today in order to sort of mitigate the risks and sort of reduce some of their exposure, just in case something would go wrong here over time.
But I mean, we've talked about this a bit in the other podcast as well. But what are some like practical advice that companies can do that they can start implementing today or over the next 6 months?
There's a lot that you can't do. I mean, they want to continue to invest in China, and they want to be present there. And like you and I always say that the sentiment in China may be very different a few months from now, when if they give up on the zero COVID policy and all that. So definitely we do see companies continue to invest or sort of wait out the current situation in China. But I think the more important discussions to be had is what you do actually today, and there are a few quite basic things. One is, of course, to look at your supply chains. Could you move some of that supply chain outside of China? That's something that comes up. Another one is, of course, could you sort of reduce your assets your in China somewhat? Maybe go asset light by divesting some fixed assets. Could you divest, for example, your if you own some land use rights or your factory in China, Could that be done? And then maybe when it comes to sort of banking and the kind of advice that we give, you of course look at the possibility to hedge your foreign exchange risks by, to a large extent match your assets that you have in China in renminbi with assets, sort of with the liabilities in the same currency. So taking up renminbi loans is a good way to reduce that FX exposure to a certain extent, and that has also become much more popular now among companies because funding yourself in renminbi today compared to doing it in for example US dollar has become much cheaper relatively speaking, which was not at all the case, for example, a year ago. So yeah, those are a couple of examples of things you can do.
One thing I want to add on this topic is that we often talk about what international companies are doing, but what I find more interesting is if you look at like China's outbound foreign direct investment, you're seeing a pickup of China investing abroad, especially into Southeast Asia, to places like Vietnam, Thailand, Indonesia. So at the very beginning, this was just a soft power for infrastructure development. But now you're seeing Chinese companies moving out to Southeast Asia. And this investment it can be about $1 billion to $2 billion per country that China's starting to invest. Um, I mean, it started with the Samsung move in Vietnam, and then Chinese companies like Xiaomi followed. But if you look at their reason, it's basically two folds. One is, of course, the low wages that you're seeing over there relative to China. But the second one is that they're really seeing Southeast Asia demand pick up and the potential for sales. So that's why the Chinese companies are moving out as well. You're also seeing Lego was a good example where last year they said they'll invest $1 billion in Vietnam and then kind of start their first carbon neutral factory. So there is a manufacturing aspect to this, but there's also an ESG aspect with this. So when so many companies, including Chinese companies, are moving, that means your Chinese suppliers will also be moving out, which is kind of the risk that you had to take when you moved out of China because the supply chain wasn't in place. But I think when you get Chinese companies moving out with you, that risk is reduced on supply chain risks. So I think it's the positive is kind of coming along with you when you have Chinese companies kind of voting with their feet on what are the potentials outside of China.
If I look back on when I started working in China and with China and with companies in China, 90s and later on, I think it was all about at that time finding a partner, be it a distributor or a supplier or a client that sort of increased your business in China. It was sort of you wanted to get help to develop your business inside this large market in China. But I think that's changing somewhat now, where when you evaluate the supplier, it may very well be so, like you allude to, that you want to have a supplier who can also supply you in other countries. Just like actually, if I look back, a lot of the Sweden, when I used to work with Swedish companies in China, the Swedish large companies like Ericsson and later the automotive companies, they would ask their suppliers to come with them to China. That was the reason why these many times medium-sized companies actually set up in China. And you can see a little bit of that probably going on now as well, that Chinese suppliers that you have for the Chinese market may also be able to serve you in other markets outside of China. And the same goes for clients that I've also heard from customers looking, when they prospect among customers in China, they try to pick the winners, companies that will also be that also have a global strategy and that you can sort of follow in the world. So I think that's quite an interesting development. And like, should we just continue a little bit on this theme before we start to wrap up here? You alluded to these markets in Southeast Asia showing quite strong growth, and therefore, more companies are betting on them and investing in them. And I just saw the World Bank forecast recently, the economic forecast for 2022 and 2023. And now the World Bank expects China to actually grow a little bit less than 3% versus over 5% in the rest of Asia. And this will be the first time since early 1990s, I think, that the rest of Asia will actually outperform China. So uh, I think in our last podcast, we talked about two of these countries, Indonesia and India. We could, of course, add. We talked a lot about Vietnam already in this podcast, and you could definitely add other markets in this region because it's quite diversified. But these three, Indonesia, India, and Vietnam, are often mentioned in discussions that I have with Asian executives in the region. So why don't we maybe we do that in the next podcast? We start to discuss these economies a bit and sort of dig a little bit deeper into them.
Yeah, I agree. And we should definitely invite our Eugenia Victorino. She's head of Asia strategy, and she's an expert in Southeast Asia. It's right up her alley. So to be a good person to invite and have this conversation.
Let's plan for that. But should we then just quickly summarize this today's podcast, Sean? I think we talked, of course, you talked a little bit about the economy. Very mixed pictures in the numbers there. Reasonably strong headline growth, but a lot of weak points beyond that or below that. We talked about the Party Congress, of course, what that means for foreign companies in China and the strong consolidation of power under Xi going forward. And we talked a little bit, yeah, we talked about the property sector, of course, where you see maybe some improvement soon, even though it's quite weak still today. And of course, we talked about this China plus one strategy and companies investing in some other countries that we will continue going forward. But is that a good summary, or did I miss anything that you wanna add?
Yeah, I think you want to just add the one on the China zero COVID that you're looking for the narrative to change. I think that'd be a big indicator of how the direction can change on the Chinese economy.
Thanks a lot, Sean, and I look forward to our next podcast already.
Thanks, Frederick. We'll talk again.